Hey everyone, welcome back to Corporate Decoder, the place where we decode the often complicated world of corporate finance. And today we have a big one, the annual report from Digi International, incorporated the DGI folks. And let me tell you, this report paints a really interesting picture of a company navigating a complex landscape. And while there are definitely some bright spots, there are also some challenges that we need to unpack before we start. If you appreciate getting straight to the point insights from these dense financial reports, make sure you are subscribed. And for those who want to dive even deeper and connect with other finance enthusiasts, our Discord community details are in the description below so you can join the conversation. Alright, let's get into it. Digi International Incorporated is putting out its annual report for the fiscal year ending the 30th of September 2025. And this is essentially their yearly checkup, with the SEC laying out everything important for investors to know. Now, Digi trades on the Nasdaq under the ticker symbol DGI, and it looks like their common stock has had some ups and downs as expected for a tech company, with prices ranging from $23.13 to $38.11 in fiscal 2025 and ending around $38.38 on the 14th of November 2025. One thing that caught my eye early on is their focus on cybersecurity. They mention having processes in place to manage risks, and they even provide training for employees. This is super important because in today's world, if a company has a cyber incident, it can be devastating to their reputation and their bottom line. They also claim to not have encountered any threats that materially affected them to date, but as they wisely point out, there are no guarantees. Digi is basically in the business of connecting things to the internet for critical uses. Think about businesses that absolutely need their devices to be online and secure 24/7. They have two main segments. One is IoT products and services, which includes things like wireless modules and routers that go into other companies' products. And then there is IoT solutions, which includes things like temperature monitoring for food service and healthcare. Their strategy seems to be about growth and profitability, and importantly, they've been transitioning more towards subscription-based services, which usually means more predictable income and higher margins. They even acquired a company called Jolt Software in August 2025 to beef up their IoT solutions segment and enhance their existing SmartSense by Digi offerings. A big chunk of their sales, about 60%, come through distributors and resellers, meaning they rely heavily on partners to get their products out there. This can be good for reach, but also means Digi has less direct control over the final customer interaction. Now, the competition is fierce in this space. Digi is up against companies that might have bigger budgets and more resources. They compete on features, reputation, and price, and they acknowledge that some competitors focus on just a few products, giving them an edge. Interestingly, they outsource most of their manufacturing to places like Thailand, Mexico, and Taiwan. This helps them keep costs down and stay flexible, but it also means they are vulnerable to supply chain disruptions, which has been a big issue for many companies globally. Let's dive into the numbers themselves for the fiscal year ending the 30th of September 2025. Total revenue was $430.2 million, up slightly by 1.5% from the previous year. That might not sound like a huge jump, but when you look at the gross profit, that was up significantly by 8.3% to $270.7 million. And importantly, their gross profit margin jumped to an impressive 62.9%. This shows they are becoming more efficient or selling higher margin products and services. Operating income also saw a nice boost of 17.1%, reaching $56.3 million. Net income more than doubled, increasing 81.3% to $40.8 million. This is a really strong improvement and signals that their efforts to boost profitability are paying off. A key metric for Digi is ARR, or annualized recurring revenue, which represents the yearly value of their subscription contracts. This number jumped 31% to over $152 million, a really healthy sign of growth in their subscription services. The IoT solutions segment, which is more subscription focused, saw its ARR grow to $120 million. Looking at their balance sheet as of the 30th of September 2025, total assets are over $922 million. A significant portion here is in identifiable intangible assets and goodwill totaling well over $700 million. These numbers often come from acquisitions and represent things like customer relationships and brand value. On the liability side, long-term debt stands at nearly $159.2 million. This is up from the previous year, but they did recently secure a new $250 million credit facility, which gives them financial flexibility. They seem to be managing this debt well, and expect to have enough cash and borrowing capacity to cover their operations for the next 12 months and beyond. Digi International Inc. Consolidated statements of operations shows that product revenue was $296.6 million, while service revenue was $133.6 million. The growth in services is a positive trend as it usually brings more stable and higher margin income. And finally, diluted net income per common share was $1.08 this year compared to just $0.61 last year, a substantial jump that shareholders will definitely appreciate. It's worth noting that their investing activities show a significant outflow of nearly $148.3 million in 2025, primarily due to the acquisition of Jolt Software for about $148.5 million. This acquisition is key to their strategy for expanding their IoT solutions segment as mentioned earlier. In terms of risks, Digi faces several. Supply chain disruptions are still a concern, as are international trade policies, tariffs, and global economic conditions. They also mention the risks associated with their participation in services and solutions models where execution and competition are key factors. Now let's talk about goodwill. This is essentially the premium a company pays for an acquisition over the fair value of its identifiable assets and liabilities. Digi has a substantial amount of goodwill, over $392 million in total, so it is crucial that these acquisitions perform well. They did their annual impairment test in June, and thankfully all their reporting units, including IoT solutions, had fair values exceeding their carrying values, so no impairment charges were needed this time around. The acquisition of Jolt Software also involved valuing intangible assets like customer relationships, which were valued at $99 million. This is a significant number and relies heavily on management's projections for future cash flows. The auditors flagged this as a critical audit matter, meaning it required extra scrutiny due to the subjective nature of the valuation. Digi does use stock-based compensation as part of its employee incentive to align interests. For the year ended the 30th of September 2025, this expense was over $15 million. This is a common practice, but it does dilute existing shareholders slightly over time. And of course, the auditors Deloitte and Touch LLP have given Digi International Incorporated a clean, unqualified opinion on their financial statements, which is always a good sign. They did highlight goodwill and the Jolt acquisition's intangible asset valuation as critical audit matters for this year. So what is my take on Digi International based on this report? The company is clearly focused on shifting towards higher margin services and growing its recurring revenue. The acquisition of Jolt and the growth in R are strong indicators of this strategy's success. Their profitability has improved significantly, with net income more than doubling, which is excellent. However, they are still heavily reliant on channel partners and face intense competition in the IoT space. Supply chain vulnerabilities and macroeconomic uncertainties remain lingering risks that they must continue to manage diligently. The substantial goodwill on their balance sheet also means future acquisitions need to be carefully integrated for success. Overall, Digi International appears to be on a positive trajectory with a clear strategy for growth and profitability, though navigating the competitive and ever-changing tech landscape will continue to be a key challenge. They are demonstrating resilience and strategic moves that suggest they understand where the market is heading. Alright, that is our breakdown of Digi International's latest annual report. What are your thoughts on their performance and their strategy for the future, particularly with the shift towards subscription services and these acquisitions? Let me know in the comments below. If you found this analysis valuable, please give it a thumbs up and subscribe for more deep dives into corporate filings. And remember to join our Discord community linked in the description for more in-depth discussions and exclusive content. Thanks for watching. See you next time.